Hello, everyone. Welcome to today's session on automating global indirect tax compliance within Workday Financials, strategies for business growth. Thank you so much for joining us. My name is Scott Sunday with Vertex. I'll be your host and moderator today. Let's get over to the next slide here. Okay, so I'm showing the KPMG Safe Harbor slide for compliance purposes, and just going to go through some general housekeeping before we get going here. So first, just would like to ask everyone, please keep your audio muted to avoid background noise. And some quick instructions on your presentation console. So the Q&A button will allow you to submit questions. Feel free to post any questions here, and we will get to them during the Q&A portion after the presentation. Feel free to browse the resource list. You'll find additional information about Vertex, KPMG, and Workday there. You'll also see two buttons on your console for call to action and request demo. So anyone interested in additional information afterwards, if you'd like to speak to sales, feel free to click those links and just follow the on-screen instructions. After the webinar, immediately afterwards, a short survey will appear on the screen. So we love getting your feedback, which is so valuable for future planning efforts. Everyone that completes the survey will be entered to win a $50 gift card. So if you don't mind, please hang around for a minute or two afterwards and complete the survey for us. Finally, a link to access the recording of today's presentation will be available in coming days and email to everyone that registered. So let's go ahead and get started. I'm pleased to welcome our panelists today. We have Jason Warren, Senior Partner Development Engineer from Vertex, Joni Johnson-Powell, Partner, Salt Transaction Systems from KPMG, and Nuno Bento, Principal Global Product Manager from Workday. Welcome, panelists. Thanks for joining us.
Thank you, Scott.
Excited to be here.
Yep. So before we get into our panel discussion, we're just going to provide a quick overview of our respective companies, and then we'll get into it. So Jason, I'll turn it over to you just to talk for a minute about Vertex.
Sounds good. Thank you, Scott. And everybody, thank you for attending today. I hope you find this session to be very informative. And I know that myself and the other presenters were really glad to be here. I'm representing Vertex, and we've been in business now for more than 40 years, the longest standing tax provider in the industry. You can see the statistics here. I think it's just important to note, and I think it goes along with our discussion today. Vertex is really rooted around kind of three key areas. I call them kind of three pillars. And when we got started, it was really around depth and breadth of content, quality content for businesses to be able to make the right decisions specific to tax. And then ultimately, we evolved that into really a strong kind of professional services presence to help our clients with that content and getting that content integrated into their business. And then finally, really growing from there into really a technology forward company. So again, you can see the bullet points there, but that's just a little bit about Vertex. Joni?
Thanks, Jason. So KPMG is a global professional services firm. We provide audit, tax, and advisory services to our clients. From an indirect tax technology perspective, we have over 100 professionals that are dedicated specifically to the indirect tax technology service arena. We've been an alliance partner with Vertex for a very long time, over 20 years, and have really focused a lot in helping our clients with their deployments related to Vertex with, I think, over 100 implementations, I think, in the last 5 years. And so we really focus a lot in this space. Partnering with Vertex has been a very important part of our practice and our success. And along with that, we've developed some custom solutions related to the Vertex O-Series tax solution, including like our Coupa integration, as well as a homegrown developed indirect tax toolkit that we use a lot on our projects with our clients, as well as our clients use it post go live. So that's KPMG indirect tax technology as a whole, and I'll pass it over to Nuno.
Thank you. First of all, I believe that probably from the three companies, we are still the teenager here. And so we have been in business for the last almost 19 years now. So Workday, we are providing a global and native cloud intelligent enterprise management suite that includes both financial and HCM. Looking only at our financial and spend management solutions, we have 1,700 plus customers working with our Workday Financial Management suite. We have 1,600 plus on spend management. And then we have some additional surrounding products like Workday Adaptive Planning, where we have 6,300 plus customers. We have also solutions for inventory management that are mainly used by our healthcare customers in the US. We have projects, grant managements, and so on. Before we move on, I just want to highlight that currently we have customers operating in more than 130 countries. We have available to help our customers and partners deploy Workday 55 local configurations, and our fin and spend management solutions, they are available in 15 languages. And with this, Scott, I will pass you the ball.
Great. Thank you, Nuno, Joni, and Jason. So before we get into our panel discussion, let's make this interactive. I wanted just to do a quick poll question here and get some feedback from our audience. Since we're talking about global indirect tax, just wanted to see, where are you guys currently conducting business? You can answer multiple choices if you have a couple different ones here. So go ahead and put your answers in, and we'll look at the answers momentarily. It could be US, North America, EMEA, Latin America, LATAM, or APAC. So yeah, we'll give everyone a moment to put your answers in, and we'll see where you are transacting. All right, so let's go ahead and move over and show the results. I hope everyone had the chance to put your answers in. Wow, okay, so it looks like everyone that responded is conducting business in the US, a little bit of EMEA and APAC, and not quite as much in Latin America. Awesome. Okay, so let's get into it. Let's get into our first discussion question. So, in terms of the increasing complexity of indirect tax on a global scale, let's talk about, what are some of the VAT compliance challenges facing global multinationals, and how is this expected to evolve over the next few years? Joni, would you be able to get us started on this question?
Yeah, sure, Scott. Yeah, I would say that what we're seeing with our clients is just with the number of ever-changing rules and regulations, I think clients just trying to stay in compliance is a challenge. The tax authorities have been in the last couple of years churning out regulation after regulation, change after change. And one area, for instance, that we're seeing a lot of movement and complexity is in e-invoicing. I think the last I checked with our e-invoicing team, we tracked over 400 developments that range from mandates, data structure changes, regulations, reporting requirements, types of documents that are included. And I think the challenge for a lot of our clients is that, with all of these rules and regulations, there's a lack of harmonization or standardization. And so it's a lot of rules and a lot of requirements that they're required to comply with. And that means, data changes, system changes, understanding how their tax engine is involved in that compliance piece. So just the number of changes, I think, have been very, very challenging for our clients. Jason, did you want to provide some insight on what you're seeing on your side? Did we lose Jason?
Jason, I think you might be on mute. I don't know if you can hear us.
Well, my mute button's working. Thank you, Joni. Thank you, Scott.
You're welcome.
Yeah, so to build on what you were just saying, Joni, it's really around the logistics, right? So the complexity when we talk about that, when we talk about selling across various states here in the U.S., it's really around kind of what you're selling, who you're selling to, and being able to ultimately really track that, right? Because when we talk about a business that's growing, especially around VAT compliance, you need to be ready to adhere to the rules and the regulations, not only on what you're collecting, how you're collecting it, and how accurately, but then how are you reporting that, right? And we're going to talk about it more in a little bit around e-invoicing. There's going to be data structures. There's going to be reporting requirements. There's going to be inputs and outputs. So it's not just what you're selling and who you're selling to, but what are you purchasing and where across the globe are you purchasing these for, various parts of your business. So there's a lot of things that go into the complexity. And when you talk about not only those things logistically, but then to the question, the original question, just the ever increasing changes, right, that are coming from various states, various regions, various countries, you've got to be able to have a way to scale and automate that process through tax technology. Nuno, did you want to build off of what Joni and I have already shared?
Yeah. This is great because this is exactly what we are seeing. I just want to add just a couple of additional points here. One is that, we are definitely seeing that growing number of changes and regulations across multiple different regions, countries, but we also see that things like digital economy, the evolving technologies, many countries are already working to update their VAT rules to address those changes. And then when you look at particular industries, some struggle more than the others. If you have, for instance, Jason, you already touched on the fact that you need to know what you buy, who you sell to, but when you add complexity like cross-border transactions, then you have everything that is related to data management, proper record keeping, making sure that you have the proper documentation to justify those transactions, VAT rate changes. We see a lot of tax authorities across the globe becoming more vigilant, enforcing VAT compliance, and that might imply that you have to do e-reporting on or online reporting of your transactions and so on. So in terms of evolution of VAT compliance for global companies, I think that what we will see in the next few years is that, and we are already seeing some of that coming here in Europe with VITA, is the harmonization effort between some states, which might be good for us because it means that some of that complexity that we see different countries having different regulations might go away. However, the increasing coordination between tax authorities, that might also imply that you need to do additional filings, that you need to change some of the reports that you currently have. The other thing is that because there is a tendency that tax authorities already know your transactions, most likely in the future you will see that they will provide you your pre-filled tax returns, and companies will have not just to file the tax returns, they will have to reconcile everything that they have to make sure that what gets reported is in line with what they have in their records.
Yeah, and and I think that's a great point, that the compliance process that we know today is most likely going to change significantly in the future, because those tax authorities are going to send you the tax return, and then it's your job to reconcile to make sure that what they have is correct.
Absolutely.
Great. Thank you, everyone. It's a great discussion there. Let's go ahead and we'll move into our next question. So for businesses who are transacting globally, curious what you think about, what are some common limitations of using their native ERPs for tax calculation and remittance? Jason,
Yes.
Can you speak to this one?
Absolutely. Thank you, Scott. I appreciate it. And I know my other co-panelists here will have some things to weigh in on this as well. But I think a great way to look at this from an ERP perspective is really kind of three main components. And there's probably other factors as well. And we'll talk, like I said, about e-invoicing as well. But it's about, first and foremost, tax rates and rules. Then secondly, really around reporting and the results. And then finally, thirdly, get, timely and accurate filing of the returns. And so if we try to look at this and kind of corner an ERP system to have native functionality that can meet all of these, and I know that these are only three things, there's other factors as well. When we talk about it in the US, we talk about it globally, what is that rate and that rule maintenance going to look like? If I can get all the rates into my system, can I apply those rates to my customers, to my vendors in an accurate way? If I have the rates applied, is there a way for me to create some sort of rules-based system to say that in this scenario, apply the rates in this way, and then in this other scenario, apply these rates in another way? The other thing too that's really can be challenging when it comes to rates is the fact that they might change from month to month. Those rates might get adjusted in certain jurisdictions, certain countries, or quarter to quarter. And so if I'm making those changes in my ERP system, is that having an impact on me and my ability to close out a prior month or a prior quarter using that information that was pertinent to those transactions when they occurred? And then reporting. Am I going to be reliant on building out a general ledger that's going to allow me to get the detail I need around liability? And then finally, kind of around the returns piece. It goes above and beyond what I can do inside of my ERP to get results that I need on my invoices. How am I going to then be able to communicate that to the governments, or like Joni and Nuno were talking about in the future? It's going to be more of a reconciliation exercise with those government entities. Nuno, would you like to take the microphone from here?
Yeah, sure. It's funny that you have already mentioned those three different elements. I think it's in line with the way that we see things. I think that in general, the way that we look at the complexity that global organizations face when they go and try to expand their business abroad is that they usually have either a strategy where they have a centralized system and everyone is using the same, but then they struggle to meet local compliance, or they may have different packages and then they struggle to report their corporate needs. So if we add the complexity of dealing with tax compliance, with tax reporting, we know that global companies ideally will need one single system everywhere that they operate. And that system is needed for transacting, to plan, to analyze, and they should have one security model, one data model, with the same view into the financial reporting and operational performance. Tax compliance, especially when we look at complex jurisdictions, complex countries, it may seem inconsistent with this approach. But I would say that at least from a development point of view and a deployment point of view, it's less about the ability to handle a particular requirement, because you can establish those and write those business rules, as Jason said. But the problem is maintaining those business rules accurate and updated according to the latest information and requirements from the different tax authorities. So it's all about the cost of maintaining those specific tax rules within your system. Do you really want to do that, or do you want to maybe focus on things that may add additional value to your business, knowing that the only thing that is guaranteed is that there will be constant change. Tax rules will change, tax rates will change, the way that we report will change. So is that something that you want to keep within your core system, or is this something that you want to leverage the great work that partners like KPMG and Vertex can do to help you to have that answer and to be compliant? Joni, do you want to add?
Yeah, I mean, I would just echo what both you and Jason mentioned. I mean, what we find with a lot of our clients that are using their native ERP is that, I mean, just from a perspective of scalability, you know, a lot of companies are global these days. They're purchasing or acquiring other companies, getting into new business lines, expanding their offerings. And so when you have such a complex business environment, one of the last things that you want to have to worry about is, you know, manually updating rules and rates and configuring for a lot of these multi-country complex rules with cross-border rules and reporting and digital reporting and so on and so forth. And so as companies grow, I think they realize that, you know, maybe in the beginning utilizing native ERP capabilities, you know, they were able to manage it, but any global company is going to struggle. I think with the pandemic, we saw, you know, such a change in our environments where a lot of us had to do a lot less or do a lot more with a lot less, fewer resources, disparate resources located all over the world or all over within a region, and just having the ability to manage the tax function with, you know, audits and compliance and planning, you know, having a solution, a tax solution that, you know, is monitoring all the rates for you, is monitoring those changes, you know, has those special conditions to accommodate some of the special ways that transactions happen, really take a lot of that heavy lift off of your IT and tax departments, so that you can focus on, like you said, you know, more value add type focused task and processes that really help the company as they look to expand, you know, their operations and create more efficiencies.
Great, thank you, Joni. Yeah, really good points you all made on this question. So before we go into the next panel question, let's do another audience poll. So everyone in the audience, just tell us, what is your biggest tax pain point? We're curious to find this out. So for this one, you can only answer one choice. Is it bad data, incorrect tax calc, maybe audits and audit risk, returns and filing? We hear a lot about the shortage of tax professionals, VAT compliance, obviously a big thing, or e-invoicing and real-time reconciliation. So go ahead and put your answers in. We'll take a look in a minute. Just want to give everyone a moment and see what you think. Wow, okay. Interesting responses. Panelists, any thoughts from you guys on the biggest tax pain points? It looks like it's kind of spread out pretty evenly, but any reactions before we get into our next question?
Yeah, so I'm not surprised by bad data. That was kind of my number one. That's what I hear a lot from our clients. A lot of times the tax team that is on the back end of receiving the information, they don't have a lot of control over that front end data. So bad addresses, you know, incorrect product descriptions or mappings really can affect the tax calculation on the back end. So I'm not too surprised.
Great. Thanks, Joni. All right, so let's move along. We'll get into our next question for discussion. So what are the top benefits, would you say, of automating indirect tax and using third-party vendors for implementation? How do vendors like Vertex and KPMG support smooth integration and implementation with Workday Financials? Nuno, would you be able to kick us off with this question?
Yeah, this is a great question. I don't want to sound like I'm saying something that everyone knows, but I think that organizations should be able to use technology for the reason that it was created, to make life simple. Partners like Vertex and KPMG help our customers to alleviate the tax maintenance burden and improve the accuracy of statutory filings. I think at the end, what we all want is to be able to help our customers in a way that they can run their global finance operations in a smooth way, that they can quickly enter into new markets, and that they can adjust to changing requirements with minimal risk. So bottom line, I think that core system, in this case, Workday, Vertex, KPMG, we can all work together to make sure that customers have what they need in order to minimize the risk of those changes that we have already mentioned.
Great. Thanks, Nuno. Back over to Jason. What would you say about this one?
Yeah, I would definitely echo sentiments from Nuno. I totally agree, and I would just add to that to say really that from an automation perspective, when we talk about implementation, what I've seen really time and time again is that when an ERP project, when an entire technology project, is in play, a lot of times the tax piece of it, for whatever reason, is really kind of kept a little more kind of traditional or manual, right? And so if we look at it in that way, it potentially could be an anchor on the project, meaning that maybe it's a second thought. It's after a lot of things are already in play. And so if we look at partnering with KPMG and with Vertex, you've got the technology from Vertex, and you've got a strong partner like KPMG that's got the resources and hundreds upon hundreds of projects that they've already done, and they've got that experience to where they can really help drive a project and hit those milestones, and ultimately maybe even help to end a project, if not on time, maybe early, right? And you'll see savings in that way and efficiencies as well. And so Vertex, from a technology perspective, right, we're able to help address many of those things that I touched on in our previous question, which is really having those rates, those rules, everything that you need, those constructs, so that you're not having to go and build those things from scratch. So that's what I would say when it comes to implementation. Joni?
Yeah, thanks, Jason. I can reflect on this. I was just at a client workshop yesterday that is a Workday Vertex implementation. And one of the things that I took away from those meetings too is that, where we see a lot of the value is that you get a different perspective. I think our team was able to provide a lot of value to the implementation team for a client that's moving to Workday Financials, to some of the things that you have to consider. For instance, on the purchasing side, it was like, you go through an exercise where you take your products and you map them to a spin category. And where we were able to provide some value to, who is our ultimate client, the tax team, was to say, hey, these spin categories are great, right? But we educated the implementation team about, for instance, the fact that you can't just have software. There is one software category. And we had to explain that there are, tax differences in the US in whether software is downloaded, whether it's load and leave, is the software for residential or other purposes, are there allocations? So we brought up a lot of different issues to that team that otherwise, if, our experience and our discussions and our understanding of what the rules were, our tax team potentially would have had a setup or configuration within Workday that would not be super beneficial for evaluating tax on supplier invoices because it's not, granular enough for the tax engine to make the tax determination. And so with that, a lot of those capabilities that you have within the native tax within a native tax solution within an ERP would not be able to provide a lot of the value that you get from a third-party solution. And where I really find that we provide a return on the investment that these companies are making with implementing, a new ERP system, or even value on the back end by limiting audit risk and maximizing accuracy. A lot of times you don't think about tax being a profit center, but by automating and planning these projects in a way that allow you to account for a lot of issues that may cause the risk in the audit. It's really important to have this vision of how do we best implement the solution that benefits the company as well as the users on the tax end. So maybe that's a long way or example of talking about the benefit of automating, but we see it time and again. And even yesterday with some of our sessions, it was really relevant that we could provide a lot of that value that benefits the project as a whole.
That's great. Thank you, Joni. That's a great example that you shared too. Really appreciate that. And also Nuno and Jason, thank you guys for your answers. All right, so let's go into our next question. I'm going to talk a little bit about e-invoicing now. So obviously, as you probably all are aware, e-invoicing governmental mandates gaining additional traction in EMEA. Just curious, panelists, what are the forthcoming compliance implications in terms of e-invoicing for U.S. and North America? And why would you say businesses should start planning now for that real-time reconciliation? Joni, would you be able to kick us off on this question?
Yeah, sure. E-invoicing seems to be a part of our everyday discussions with our clients, and really the implications can be significant. If you look at countries like Italy, for instance, I think they issued their mandate maybe 2019. I think over the last few years they've had a lot of changes to how that e-invoicing and reporting rules work. And so, it's not just about the fact that, you need to, comply with the rules, but there are significant penalties that can be imposed on a per invoice basis. I'm not sure if the rules have changed a lot since the last time I looked at these rules, but there could be up to a $2,500 penalty per invoice for not complying with the rules. So the cost of compliance or non-compliance is significant for these companies, and it's complex, right? And I think we mentioned this earlier, the fact that there's not a lot of standardization or harmonization around these rules. So part of the important part of companies planning for a lot of these changes, especially in Europe, is just understanding the data requirements, understanding what those functional data requirements that these governments are mandating, and how and where are you going to get this information from? Where in the ERP are you going to gain this information from? And what does the structure of that data need to look like? So it really requires planning, not only from a tax perspective, but from an operational perspective. And so I think that's a real challenge. Nuno or Jason, do you guys want to provide some insight and your thoughts in this area?
Nuno, why don't you go next, and I'll follow you.
Yeah, sure. I think that, Joni, you mentioned data, and to me, it's all about data. You are absolutely right. It's making sure that you have the right data. Often when we look at these mandates, there are one or two different layouts that are required or that are accepted. And those layouts and those standards, when we look at them, they include much more data than we are used to see in a paper invoice. So the level of detail, the information that you pass, not just to your customer, but also the fact that, like in Italy, Johnny, you mentioned Italy, you have to communicate those invoices to the tax authority. So you pass a lot of information to the authority, and you have to plan to make sure that you capture that information in your system. A lot of times, what we see is that there is a misalignment between what we have or what the customer is currently having in in their system, in the way that they issue invoices at the moment, versus what is expected in those mandates. Also, the fact that if we look at France, for instance, you have to not just communicate the invoice, but also the payment status of that invoice to the authority. So at the end of the day, this will be changing some fundamental rules in terms of communication between company, customers, tax authorities, and for sure there are many different benefits. From a business point of view, it will imply less errors, less manual interventions, the speed up of financial reports. But from a compliance perspective, you have to make sure that you have that data in order to speed up and make sure that you comply with those processes.
Yeah, and to build on that, e-invoicing, as many of you probably have heard, is gaining a lot of traction, right? And Joni and Nuno already mentioned some of the countries like France and Italy and Poland. We're even starting to see some headlines cropping up in the United States where they have a pilot program that's currently ramping up. And it seems like it's going to kind of follow suit with some of the other standards around the globe. But I'm going to go back to what I had mentioned earlier, and it's really around logistics, but this is more of kind of a technology thing that really you want to be thinking about. There are governmental mandates today. I think Joni and Nuno would agree. It seems like they're kind of ever evolving and they're still kind of a moving target. But some of the things, if we get kind of minutia, if I could for just a second, to think about is whether it's on the AR side, where you're going to need to be able to accurately send out invoices, but not only invoices, but you're going to need to be able to embed supporting documents. And within those documents, they're going to have to follow a strict set of file types, right? If they go outside of that, they'd be rejected. If they're too large, they'd be rejected. And then on the accounts payable side, think about it in terms of the fact that those vendor invoices won't be coming directly from the vendor, but they'll actually be coming via the government, right? And so you'll need to be able to actually then take those into your ERP system and take them as accurate because they're already coming from the government. So whether or not it's the right tax or not, the right determination or not, you have to be ready and your system has to be able to capture those details that are transmitted directly from the government. So again, it comes down to those logistics and being able to really adhere to those standards and those requirements. So Scott, back to you.
Great. Yeah. Thank you, Jason. Thanks, everyone. Great discussion there. And, we've definitely at Vertex been seeing more and more interest in this particular subject around e-invoicing and just expanding into new global markets. So let's go ahead and get back to the audience and do another poll question. So while we're talking about automation, Curious to find out what is currently automated at your organization. So you can only answer one response for this. Is it purchasing? Maybe compliance? Possibly tax calc and compliance? Is it all the above? Not using any automation, or maybe you have some sales automation happening. So give everyone a moment. Go ahead, put your responses in. We'll look at the answers, and then we'll keep moving forward. All right. So looks like all of the above. So a lot of people have a lot of automation happening, with the second most popular answer being purchasing. So that's good to see that some automation is happening and everyone is relatively digitally mature. Any thoughts from the panelists before we move into our next question? Or
I would just say that seeing the purchasing and all of the above there. I mean, I think at one point a lot of companies, it was a no-brainer to automate sales taxes. I think we're seeing a lot more companies look to gain some efficiencies on the purchase side, and so seeing that purchasing percentage seems pretty consistent.
For sure. Thanks, Joni. All right, so let's get into our next discussion question. So panelists, can you share any tips or suggestions on how to go about building an effective business case for tax automation? Specifically, how can customers get the buy-in from the necessary internal stakeholders? And why is it critical to get tax involved as early in the process as possible? Jason, what do you think about this one? Can you kick us off?
Absolutely, and I think there's several different directions I can go, and I want to make sure I kind of stay on my track here, on my line of thought here, because I know Joni and Nuno have a lot to add here as well. But I would just say that when you're looking to make an effective business case, to try not to repeat all of the things we've shared with you already today, I think one thing you can really look at is, and I like to think of it like this. So the business may be growing year over year organically, but what are you doing to be prepared, in the event that you need to maybe raise capital, or you want to be IPO or acquisition ready? I think it's so important that when you're building a business case for tax automation, that you think about these things, right? Because I think ultimately these are going to resonate with your leadership, because when you include tax in that discussion, those things I just mentioned, right? Maybe there's a point in time where the business might need to raise more capital. You want to be at a place where you've got effective, scalable tax technology in place, because really you've got data that's reliable, and you've got invoices that are going out the first time and they're going out accurately. Or maybe you want to be acquisition or IPO ready. When a business is being considered for acquisition, tax is one of those things that's going to bubble up to the surface, right? What kind of liability is the business going to bring, as somebody that's being considered for acquisition? And do you have those things in place that make you really low liability because you're doing those things you need to be doing as a business? So I would say, if you can build your business case around kind of those three different kind of categories, I think you're going to be able to go a long way to building a strong case. Joni?
Yeah, Jason. A lot of times we find ourselves trying to help, our clients build that business case, right? A new ERP is going to be implemented. Maybe they're going to automate purchasing or something like that. And often tax is not a consideration in those projects, and doesn't always have a voice. And so we often find ourselves trying to support, the tax department to make sure that the tax is included. And a lot of it is like what you said, Jason, identifying those objectives. Why is it important to automate tax? We talked a lot about all these rules and complex laws and expansion, and maybe you're going to go to IPO, and you don't want the due diligence auditors to say that you have a huge liability that could hurt the transaction. And so a lot of times we try to help our clients also quantify, right? So what's that return on the investment? Is it increased efficiencies? Can we quantify that? Can we quantify reduced liability, reduced overpayments because your vendors are charging you too much tax, and you don't have the time or the technology to evaluate those invoices when they come in. And so we really try to help our clients, and really, as you're looking this, you really want to look to be able to quantify the cost benefit of doing that, and those issues that could impact the company are not only just with auditors, but even perception in the media. These days, any of those things can cause a lot of pain for a company. So really focusing and making sure who your stakeholders are, and having that voice and that relationship to get their buy-in, I think, is super important.
Thank you, Joni. Nuno, anything to share on this one?
No, I think that Jason and Joni had already mentioned all the most important aspects of that should be considered when building that business case. I just want to emphasize that to me, it's all about a clear presentation of the benefits. So and I think Joni, Jason, you have already mentioned these: reducing errors, lowering the compliance risk, speeding up processes. So tax, and we often even say that financials is not something that sell because everyone assumes that it should work. But that's not the case here, right? So we have to make sure that tax and compliance, they go hand to hand, and that we are here to help the company to achieve their goals. And if the goal is to enter a particular market or to be successful in a particular industry, then we have to make sure that focus is not on something that can reduce the speed of success for the company, as tax might be, due to the impact that may have on the overall objectives of the company.
Yeah, and Scott, I was just thinking about another instance with the client that came up, and it was customers, comparing their invoices to their competitors' invoices for tax. I mean, just as simple as that, being competitive because you might be overcharging compared to your competitor, or inaccurate, and it was a real consideration for the company to be more competitive, to make sure that their tax application was accurate.
Well, that's a great point, because it's often we don't think that it's how much you charge. We always think about fines and possible consequences of not charging a particular tax from a tax authority point of view. But the fact is that even a couple of cents, right, it might have a huge impact at the end of the year.
Yeah.
That's a great point, Yeah, sometimes those small transactions can add up quickly when there's an error and have enormous consequences. So that's great. Okay, so we have one more audience poll. We're going to jump into that in a moment. Just also wanted to encourage everyone in the audience, if you guys have any questions for Q&A, we're going to do one more poll, and we're going to have one more discussion question with our panelists, and then we're going to take some audience questions. So before we get into the next poll, I just wanted to mention that and encourage everyone, any questions for our speakers, go ahead and submit them in the Q&A tab in your console. All right, so our last poll question. So as we discussed e-invoicing, just wanted to find out, how prepared would you say is your organization to navigate and keep track of CTC, given the current landscape, CTC, continuous transaction control? So would you say you're very ready, somewhat ready, not ready, or what's a CTC? So go ahead, put your answers in. We'll take a look, and curious to see what everyone thinks about this one. All right. So it looks like most folks are somewhat ready, or I guess on the road they're thinking about it. So great responses. I don't know, panelists, if you guys have any reactions to this one. If not, we can keep moving, but I just wanted to give you the chance to comment if you'd like to. No? Okay, no worries. All right, let's keep it moving. We'll get into our last discussion question. So just kind of building on what we talked about earlier, just aligning tax early in the process. So if it's not possible to do that, can you name some best practices to ensure that there's success downstream when it comes time for implementation? Nuno, if you don't mind, let's start with you in this question, please.
Yeah, sure. I think that as in any other project, I think it's all about communication. I think that first of all, you have to have good communication. At the beginning of the project, at the end of the project, throughout the project, I think that communication is fundamental. You have to set up proper testing. You have to monitor what are your key elements to make sure that you have a smooth integration of those tax automation solutions into your business operations. I think that we have already touched about the fact that sometimes we don't look at the data, but not having proper tests and making sure that you have the proper tax IDs and the correct layouts for files and reports may have a huge consequences at the end of the project. So communication, testing, and making sure that you look at the key elements throughout the project.
Great. Joni, any thoughts from you on this one?
Quickly, I would say if you find yourself in the situation where maybe you weren't part of, the early planning, and you'd like to get tax, included as part of that plan, I think key is making sure you identify and align with those decision makers. And so I think it goes back to kind of the whole business case. You've got to make sure that, you connect with those key decision makers around, an ERP implementation or an upgrade, and make your case. And I think as part of making that case is showing how tax can be integrated and align with the overall project delivery plan or objectives, I think is important.
Excellent. Thanks, Joni. Jason, anything to add on this one before we wrap it up and move into Q&A?
Yeah, absolutely. And I'll try to keep it brief so we have some time for Q&A. But what I would say, and I know it's understandable, it's really hard a lot of times to ask tax person or the tax team within your organization to step in and focus in on a project, because tax is something that happens day in and day out. And there's a lot of different things that have moving pieces there, right? I would encourage you that if they can't be in early, I would do two things, and there's probably other things you can think of as well. One, create a virtual seat at the table for them as a part of that project, meaning know that they are a part of this. And if they're not in the initial phases, make sure, and this is really what, Nuno touched on this and Joni did as well, documentation, right? So document in such a way that tax is going to ultimately come up, and you're going to need to have that really ultimately be what I like to call kind of on-ramped. So create placeholders, right? Be it in the technology, but also in your documentation. And so I would just say that if they can't be involved early, just involve that in your thought process and clearly document as best you can so that you can bring tax in when they're available and have that documented in such a way that they can get things plugged in for you accurately and quickly.
Fantastic. All right. Well, thank you, panelists. So let's go ahead and move into some live Q&A with the audience. So for anyone who has a question for our panelists, go ahead and submit those in the Q&A button on your console. So let's start out with our first question. How do we navigate support documentation during audits? Any ways to improve invoicing? I'm not sure, panelists, which one of you would like to speak to that first. So I'll read it again. Go ahead, Joni.
I think I understand the question. It sounds like the inquiry is, how do you, I guess, gather the necessary information that you need, during an audit. And a lot of times, I think we find that planning early in the process is helpful. So when we're defining, what reporting and archiving looks like, we're thinking, because we know an audit is going to come, right? And so being prepared with having, detailed reports and understanding, what's being purchased or what's being sold, who your customers are, really planning for that early on is great. If you don't have that opportunity, I think it's important to align with your IT group and see what kind of supporting information that they can provide, and providing with them with those detailed requirements on how to, how to gather the details that are needed for those audits. I hope that's what the question, that answers the question. And then maybe Nuno or Jason, you guys can address the ways to improve invoicing, maybe question.
Yeah, I would just kind of amplify, Joni, what you were sharing, and I'll get kind of like specific on one part of an audit. One thing I've seen over the years is a lot of times auditors will focus in on those sales where no tax was charged, right? And so having the ability from an invoicing perspective to be able to readily and quickly tie that to the supporting documentation, be it an exemption certificate, a resale certificate, whatever that documentation might be, and have it in such a way that it's digital in nature, so that maybe you can actually give the auditors access, controlled access to a particular set of documents, be it exemption certificates that ultimately represent that population of exempt sales that maybe they're questioning on your business. And I know I'm getting very specific. I'm not looking at the forest, I'm looking at one particular challenge, but that ultimately can help you to improve just overall kind of your invoicing quality specific to having to be prepared to support an audit. So that's what I would say. Nuno, anything to add to that?
No, I think that you are absolutely right. So it's all about that traceability, making sure that from the operational transaction to even the accounting journal, you are able to track that operation, that, as you mentioned, if there is a particular way that you have determined taxes, if there is an exemption apply, which rule was used, where is the certificate, if possible, as you mentioned, have that attached to the document so that in the same place you see everything that is related to a particular operation. I think that from an audit point of view, we want to make sure that compliance is something that we can show to auditors. So from our perspective, is all about making sure that they have that access. Jason, you mentioned giving them access. I think that you are absolutely right. Sometimes we do need to do that because they need to see how those operations are posted, how they are registered. So at the end of the day, is making sure that they can see an end-to-end flow and that they can find everything that can justify that particular operation.
Yeah, and I think that transparency goes a long way. Just one other point, and Nuno, you just mentioned this, but I'll kind of build on it a little bit further. when you can give that level of transparency to an auditor, they say, oh, KPMG is your partner. There's probably not a lot of issues here. We're not going to spend a lot of time. Or, oh, you're using Workday as your platform, or you have Vertex in place, right? So when they see those things, yes, they can get the information they need in support of the audit, but they're also seeing that you have systems in place that are proven, that they've come across time and time again. So looks like there's another question, Scott. Do we have time for it? Maybe a follow-on? I know we're at the top
I feel
of the
like,
hour.
yeah, you know, just to be conscious of everyone's time, I think we probably have to wrap it up. But you know, what we'll do is if there's any unanswered questions, we'll go ahead and share those with the panelists, and we'll try to get back to any unanswered questions via email, if that's okay. So we're going to go ahead and wrap it up. I just want to say thank you again, Jason, Joni, Nuno. Thank you so much for your time, for that incredible presentation. Just a quick housekeeping note, like I said at the beginning, we're going to have a short survey that appears on the screen as soon as we wrap this. So we'd love to get your feedback to help us plan future webinars. Everyone who responds to the survey, we're going to enter you to win a $50 gift card. And last thing, if there's anyone interested in further info on Vertex and KPMG, any of our best-in-class, or Workday, any of our best-in-class solutions, just go ahead and click on that call to action or request demo button, and one of our reps will be in touch. So that's it. So thanks again for everyone's time attending. We look forward to seeing you again at upcoming Vertex webinars. So go ahead, enjoy the rest of your day. Thanks, everyone.
Thanks, everybody.
Thank you.